Well, like Amazon for a lot of reasons. They're going to continue to blow out earnings, even as the economy continues to contract and we still expand in this era of irrational economic data, Liz. I think what investors want to do today is buy the dips on Amazon and a few other prime Magnificent Seven stocks in advance of the Fed going dovish and saying we're going to pause rates and then ultimately lowering rates probably by the end of the second quarter next year.
Okay, so that actually could be a buy now, and then you got to wait, and there may be some bumps and bruises along the way.
Well, there's definitely going to be some bumps and bruises along the way. We've lost 1.5 million jobs in the last 3 months. That's the most ever since COVID and prior and beyond that. And so there's lots of economic indicators that say the economy is getting ready to contract. But I like to do what the opposite folks say, and all the marketeers today are saying, don't chase the Magnificent Seven at this time because they're already fairly priced. Well, you know what? The Magnificent Seven are going to grow earnings 10 to 15% quarter over quarter, no matter what the economy does, no matter what the Fed does from here. So you know what? I want to be an owner of those. I want to buy those on the dips as we roll through this seasonal volatility we're going through presently.
Jeffrey, the S&P 500 is about, I want to say, 3% off its 52-week high. In terms of the broader market, could you tell us, are you expecting, because we talked about this at the top of the show with our floor show traders, are you expecting more pullback than we've already seen? Whether it's this week, the last couple of weeks, August was not particularly a thrilling moment for the bulls. Are you expecting more pullback, or is this really the time to start nibbling more broadly around the edges of the market?
I'm not expecting more pullback, Liz, unless we see energy spike even higher above 87 a barrel, or we see inflation come back and rear its ugly head and the Fed starts fear-mongering about how high they got to raise rates again. We don't expect that to happen, but we can expect anywhere from a 3 to 5 to maybe even a 10% pullback between now and November 1st, and that's the time you want to buy. And by the way, when we do pull back very quickly, what you're going to see is the buyers are going to rush in and they're going to pick off the stocks that we're talking about today, and they're going to buy them before you even have a chance to react. And so in the blink of an eye, you could see maybe things drop 5, 6, 7, 8% from here, but it won't last very long.
Jeffrey, opinionated. We like people who take a stance here. Jeffrey Smalls, Arbor Financial. There it goes, you guys.